Hello, and welcome back to Entrepreneur Money Stories and the Kickstart Accounting Inc. tax series. Today, we're going to be talking about how to claim what you are entitled to and not let any money slip through the cracks on your tax return. Today, you're going to discover how you can maximize your deductions this tax season, and specifically how you can maximize your home office deduction. My name is Danielle Hayden, CPA, founder, and CEO of Kickstart Accounting Inc. We have worked with thousands of business owners using bookkeeping as a vehicle to help business owners better manage their business and use their numbers to grow and thrive. Now, taxes are a very important piece of this puzzle. You've heard me historically say that we need to find a balance as business owners between managing our business for taxes and managing our business to grow healthy, sustainable, profitable businesses. And so today, during this series, we are leaning into the tax side of how we can use our numbers to understand our taxes and minimize our tax liability. Now, we have worked with thousands of business owners who have buried their head in their sand and really missed out on tax deductions. However, I have one client who we walked through empowering her mindset through numbers, and she gave me permission to share her story with y'all. So this client in particular, she had jumped on her financial review call. So every single one of our clients has the option for monthly or quarterly financial review calls. I'll never forget this. She jumped on the call and she was covered in paint. So she was painting her home office, and this woman, she is a powerhouse. She had ordered this ergonomic chair and the standing desk with the treadmill. She goes big on everything. But specifically that day, she had been painting her home office, and she had taken 3 steps back to make sure that she didn't actually step into the paint. And she had laid her whole back against the wall ever so gently, right? Like she didn't slam into the wall, but she gently had stepped into the paint, and she was covered from head to toe. All of her hair was covered in paint, but she had kept at it and she had painted that whole room herself. She had put together that ergonomic chair. She had put together the desk, and she was so excited when she jumped on that financial review call that she had put all this together herself and that she was ready to embrace having her own home office. Now, her question to me on our financial review call was, who pays for it? So we're going to walk through what is the home office deduction and how you can take this on your tax return. Especially for our S Corps, this isn't what you think. So stay tuned. So what is the home office deduction? The home office deduction lets anyone who is self-employed and who works from home write off a portion of their living expenses on their taxes. Here's the rationale for this. If someone pays for an office outside of their home, it would be a no-brainer write-off, right? If you had a co-working space or you had an office space that you were going to on a daily basis with you and your team, it would be a write-off for your business. So why wouldn't people get a tax break if they spent their money on repurposing part of their home as their workstation, as their office? So let's start this framework by asking ourselves a few specific questions. So the first step in this framework, I want you to ask yourself, does your business actually require a workspace? Okay, like legitimately, does your business require a workspace? Do you have a designated area? Is it an area that you specifically regularly use? If not, you cannot write off this space. I want to break here for an important conversation I had with Kelsey Chester, one of our tax team members, who her and I had a conversation about how you can write off this specific area. All right, Kelsey, let's talk more about the home office deduction. I think that there's a lot of questions about what spaces can qualify and what doesn't. Now, I always like to use my office as an example because this room is literally used for absolutely nothing else. This background has become a staple because I don't leave, right? So this square footage is very clearly my home office. But for the business owner who is, storing and packaging merchandise at their kitchen table, can that qualify as their home office?
No, because the kitchen table is not a designated space for the business. So if you also use this space personally for anything else, that would not qualify as a home office and you can't use it for the home office deduction. So we're talking about a space designated for business, like a special room or a nook in your home. I mean, hey, we'll take any square footage, but if you use it for any other purpose, then it won't qualify.
Okay, how about the corner of my living room where I keep just my computer and my little desk, but my children's play areas all around me everywhere. There are messes everywhere, but I have this one little space.
Yeah, you can deduct the percentage of your total home that the square footage is of your little nook.
Okay.
We won't be able to include the area in the background.
Okay. All right. So tell your kids, keep the toys off the desk. You can tape it out. This is my square footage. Kids, you stay on the other side.
Yes. And, we could get nitty gritty with it, but really we just want to assess our risk tolerance and say is within the guidelines as we can.
Thank you. All right. The next question is, do you use this space regularly? If you don't actually use this space regularly, you cannot write this space off. Now, you guys see this space. You guys see my background in every single video that I record. And that's because this really is legitimately my home office. When I come to work every day, I report to this space and there's nothing else that happens in this space. So this really is, I require a workspace. I have a designated area and I use it on a regular basis. And then the last question is, do you have access to another space? So if the answer is yes, you cannot write off your home office deduction. All right. So those are the questions that I want you to start by asking yourself to determine whether or not you should go on to the next step in this framework. Step 2 in the framework is that we're going to determine your entity type and then choose the method of the write-off. So let's start with our S-Corps. Our S-Corps, you can have one of two options. If you're an S-Corp, you can pay rent for your home office. So you can pay a monthly rent option for this home office. Now, I think the important piece here to remember when we're dealing with the IRS is that there is some gray space. And I always like to use the words of be fair and reasonable. We can't pay more for the rent in our home office than we would in an office space. We can't pay more in rent for our home office than we're paying for our whole house. So really think about what rent is actually reasonable for your current space and the area in which you live in. Have you heard yourself saying, I'm scared to invest money in my business because what if it doesn't come back? I don't know how much to pay myself, so I won't take a paycheck yet. I'm reinvesting in the business anyway. Or how about, I'm not going to spend any more money until I know exactly where my money is going. Well, let me tell you, you are not alone. In fact, we have heard all of these stories and more throughout the last 9 years at Kickstart Accounting Inc. And that is why we have created the Money Mindset Mastery Framework to finally unlock and overcome these stories, to finally feel confident in your financial decisions and pay yourself what you deserve. The first step to create a profitable and successful business is to first understand your money mindset. Find out your money mindset personality type by going to kickstartaccountinginc.com/quiz. I can't wait to hear what your money mindset type is. Option number 2 is to do an accountable plan. An accountable plan is a simple way for S Corporation employees to shift expenses from the employee. Even if you're an owner, you're still an employee. So you're shifting expenses from you, business owner, employee, to the employer, your business. And it offers this ability to lower your tax liability, right? So we're allowing the business owners to choose expenses that are going to be reimbursable by the employer to the employee. Now, reimbursements for these business expenses are not considered compensation for the business owner/employee, right? So they don't increase payroll taxes. This is truly a reimbursement of personal costs, right? So you're paying for them personally and you're submitting these costs, these receipts to your business to be reimbursed to you as the business owner/employee of your business, right? I keep on saying slash, but just want to be clear. As an S Corp, You are on payroll for your business. So you are considered an employee to your business, and you are paying yourself a reasonable salary as a business owner. So it's different than how you're paying yourself as an LLC or other employees. Okay. So you're going to create a documented plan, and you're going to submit the plan and the monthly expense reimbursement with receipts to your company. The documentation doesn't need to be filed with the IRS, but it does need to be kept in your corporate documents, right? In a organized system and fashion. So that if you were audited by the IRS, you could very easily go and pull those documents and the receipts for those reimbursements. So I want to go over three things IRS says. The IRS says all expenses to be reimbursed through the plan must have a business connection. The expenses must be timely substantiated and must be timely repaid. Now, the definition of timely is vague by the IRS, and it's very, very vague. I love the IRS, right? But to me, some safe options would be to do this on a monthly or quarterly basis. Don't wait for the end of the year. Don't go years back. Make sure that you're doing this on a monthly or quarterly basis, submitting your expenses and receipts to the company for reimbursement. And these expenses will include your home office and some of those other mixed expenses. For the home office, we will have a checklist that you can download, but these include things like your rent or mortgage, utilities, Wi-Fi, home security, mortgage interest, your property taxes, homeowner's insurance or renter's insurance, plumbing, cleaning, electrical, and home improvements. Now, there are some additional guidelines there, but I'm going to pause there. For the home office expenses, you will add up your home office expenses and you will multiply that by the percentage of square feet that your home office occupies. All right. So I'm just going to walk you through a really simple example. If you rent an apartment and you pay $800 per month, the apartment is 900 square feet and the desk space in your bedroom takes up 100 square feet. That means that your business use percentage is 11%. So you're going to multiply all of your home office expenses by that business use percent to reimburse your business. So as an S corporation, we have the two options. We're going to pay rent in our home office, or we're going to use an accountable plan in which we will submit the receipts for reimbursement from our business using the percentage allocation. Now, for LLCs, we actually have a similar methodology. We can choose a flat rate method or the percentage method. The flat rate method is $1,500 flat. And this is really best for people who don't love all the record keeping and they don't want to be bothered by having to actually calculate what your personal expenses are on a monthly basis and determine the percentage. I get it. For you guys who don't love numbers, you probably don't love numbers in your personal life as well. So just know that the flat rate method, or for our S Corps paying that rent amount, it is perfectly okay to do that. You don't have to love the numbers, although I do recommend that every single one of us as business owners, that we understand how much we're spending both in our business and our personal lives. We actually don't check out of our personal life when we come to work. And as business owners, we usually can't check out of our business and go to our personal life. Those money mindset hurdles we're bringing home with us and we're bringing to work with us. So we really want to know how much we're spending both business and personal. All right, our other option is the percentage method. And this is very similar to our S Corps. You're just not doing it through an accountable plan. You will actually just take this deduction for the expenses. You can have your business reimburse you that amount, but that will not be considered a reimbursement. It will actually just be an LLC expense. All right, the last step in our framework is to obviously discuss this with your CPA. This podcast is really a tool to help you understand your numbers as a business owner, to become educated and empowered. This information is really not legal, tax, accounting, or valuation advice, right? So no one should act on any of this information without talking to your CPA to determine what they feel comfortable with. Now, your job as a business owner is to become educated and then get organized. We need to be prepared for tax season. As my mama has always said, there's two things in life that are guaranteed. We're going to die and pay taxes. And so we know that every spring we have to pay taxes. We need to start gathering our documents and get prepared for tax season. This is going to help you and your tax preparer be able to maximize your tax deductions by being organized and have that information ready. Okay, so don't wait. Discuss this with your CPA, gather the appropriate documents, and be prepared for tax season. I want to leave you with one last thought for best practices. It's really important that we don't pay for our home, internet, or utilities out of the business account. They are not business expenses. It's really important that we're paying for our mortgage, our utilities. All that needs to be paid from the personal account. Reimburse yourself from the business for the business portion. Clean bookkeeping is always our top priority. We don't want to pierce the corporate veil. If you don't know what I'm talking about, you can go back to the podcast episode that we did on business expenses versus personal expenses and why we don't commingle. But it's really important that we're keeping clean bookkeeping. So we're always keeping business separate from personal. So we will pay for our personal expenses through our personal checking account. And then the business can reimburse us for those expenses so that we can take the tax deductions. Don't ignore these important small tax deductions. I understand that this can be very overwhelming. I hear it from our clients all the time. They don't feel big enough, they don't feel confident enough, and they're afraid of the IRS. But I am here to tell you, I want you to take what you deserve. You deserve, as a business owner, to take the tax deductions that are applicable to you as a business owner. Don't leave these important tax deductions on the table. You are literally leaving money on the table. So although this will decrease your profit as a business, it's going to minimize your tax liability and put money back in your pocket as a business owner personally. If you like this episode, don't forget to hit like and subscribe. We have more episodes coming in our tax series and tons of information for you this year on how to use your numbers to help you manage your business as a business owner. We are here to be a resource for you. If you need help, go to kickstartaccountinginc.com to book a call. Our team is here and ready to be a resource for you and your business. You do not have to do this alone.